Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Avan Dubash. And the only way to summarize today's trading action is a wild roller coaster ride, because that's what we've been dealing with throughout the trading session. Sharp cuts and sharp recovery. So jagged edges across the market, a breadth today. And we've been in a very, very broad range, almost a 300-point range, 17,400 on the downside and 17,700 on the upside. That's where we have been gyrating throughout the trading session. Having said that, today it's Nifty Bank which is causing the maximum amount of pain, because that index is down 500 points, so below the mark of 40,000 comfortably for Bank Nifty. And both the private lenders as well as the public sector banking names are coming under pressure. In fact, if you look at the sectoral mix, it's only IT which has managed to hold its head above the water, and it's quite a good move as far as Nifty IT is concerned, over 1% gain as far as that sector is concerned. But having said that, you also have the US markets to deal with, wherein for now the texture is not looking that great. The Dow futures are down almost 150 points. There's almost a 1% cut on the Nasdaq, and that's also adding to the nervousness. But talking about nervousness, around this time of the year, we're usually talking about budget being around the corner. You have the Fed meeting and the auto sales data, but the spotlight for now continues to be Adani.
It's been eclipsed by Adani, and you were talking about jagged edges. I just think that your alerts on the group are enough to tell us what the markets are doing. We're recovering, we're back to those all-time lows, and yeah, that's just what we're seeing on the screen really playing out in today's trading session. Yes, the Adani Group of stocks continue to hog the limelight. It's a little bit of a mixed bag in terms of the stock reactions when it comes to individual Adani groups. Though Adani Enterprises, the stock has recovered. It's nowhere close to that FBO price band, and you've got it currently quoting at about 28.48. So from the day's lows, it has recovered. Adani Ports as well. It was flying high in the mid-morning trading session, and now back around that 590, 600 mark. Adani Power, no respite in today's trading session, so it continues to remain mixed across the board for the entire Adani Group of stocks. They have come out very vociferously with their clarification against the Hindenburg report, but of course the back and forth continues between both the companies. Let's put the spotlight on some of the other stocks that are in the news, because Adani stocks aside, there are some of the other newsmakers. You've got Bajaj Finance and Bajaj Finserv that are in the spotlight in today's trading session. Bajaj Finance, for instance, the consolidated NII is up 24% on year to come in at 7,435 crore rupees. Profit as well has been higher by nearly 40%, as the company has booked the highest ever new loans in Q3. Jefferies continues to remain bullish. They maintain their buy rating on the stock with a target price at 7,280. That's the stock price in the limelight on the upside. Bajaj Finserv has put out its highest ever quarterly consolidated PAT at a number of 2,973 crore rupees, with the gross written premium growing by about 29%. You've got BEL as well. The stock has hit a 5-month low on an intraday basis. It's grinding under pressure as we speak, low by 6.5% as it trades sub all its daily moving average levels. The profits are very flat at 614 crores, and revenue from operations have come in at about 4,065 crore rupees. So those are some of the stocks that are in the news today. But let's connect with our chartists then, and we've got on board with us Naresh Mirani, who is joining in. There's also Vinay Rajani, who is joining in on this from Senior Technical Analyst, and we've got Vineet Bulinchkar, Head of Research at Ventura Securities. Gentlemen, good afternoon. I can't really say good because it's an absolute flip-flop for the equity markets right now. But Naresh, are you taking heart in the fact that each time we're selling off, it's being bought into, there is a sharp recovery also that the markets are witnessing? Or does this flip-flop just bring about a lot more uncertainty, given that we've started the new series on a terrible note?
So if you look at today's price action, we went down 150 points, so we went up 150 points. It's been a 300-pointer range for the Nifty, and we are right in the middle. It's a classical, say, doji formation in the making, unless we go back to the lows. But that is generally the first indication of a bottom getting in place. What we require is a confirmation of the move about today's high over the next 2-3 sessions. And once that happens, that would indicate a bottom is in place. We are seeing this volatility, and that volatility, at least today, has been on both the sides. In the last 2 sessions, it was a one-way decline. But today we've seen we went up, say on the Bank Nifty, we went up post-opening with a 500-pointer gap down to all the way up, then losing out 1,000 points on the way down, 1,200 points, recovering 500 points from that. So that's generally the first indication of a bottom getting in place. So I would be more positive after today's price action. We are just down 40, 60 points on the on the Nifty, and we are possibly making a major bottom in the next today as well as by tomorrow evening itself.
Hopefully that bottom is made soon, because for now it feels like a bottomless pit given the fact that we have lost a good, what, 400-500 points in the last 2 to 3 trading sessions itself. Vinay, your take as far as the strength that we are seeing in the entire IT sector today, what's that telling you?
Yeah, so IT sector is clearly outperforming, and the large cap stocks are performing very well. In fact, they are giving fresh breakouts on the charts. So it's a clear-cut bullish sign. This particular sector has been performing well, and when market is witnessing a selling pressure, this IT sector is the only sector which is performing relatively better, and pharma is the another sector. So these defensive sectors have been doing well. So still the strength is there. If you were to go by the charts, the only IT stocks I can see which is giving up a trading opportunity on the long side, and rest of the old economy stocks are not moving that well. So as of now, we can say that it is taking leadership, and this outperformance may continue in the coming time.
Okay, Vineet Bulinchkar is also there with us on the show. Vineet, hi. Before we move forward, let's discuss the biggest talking point and the elephant in the room, and that's clearly the Adani Group of stocks. What's your recommendations to investor at this point of time? What should they do?
So, before we get to the recommendations part, I would like to say that I've heard on the street that, the book has been, the QIB book for the Adani Enterprise FPO has been subscribed to almost 4,000 odd crores. And, given the run rate, I believe that, the spillover from QIB and HNI should make do for the retail book. So, one of the key concerns for the Adani Group of stocks is that the Adani FPO goes through. Having said that, I believe that MSCI has sent out questionnaires to some of its clients on the Adani pack of stocks, and depending on the kind of information flow that they get from the investors, there could be a little bit of overhang whether the stock continues to remain in the MSCI list of recommendations of portfolios. So till that is not sorted out, I believe that the non-FNO stocks, that is Adani Green, Adani Total, and Adani Power, might be under pressure along with Wilmar. But once this dust settles on that, I think the Adani Adani Ports, Adani Green are two of the stocks which, to my mind, serve as very, very good stocks to get into at current levels, along with Gujarat Ambuja. In Gujarat Ambuja, if you notice, is that the lending is done in the promoter company, and the dividends that come from the cash flows of the ACC and Ambuja are, in my opinion, sufficient to service the debt that has been lent to the Gujarat Ambuja stock. So to that extent, I believe that this correction is vastly overdone. And once this budget and the federal decision is out of the way, I think we will see these stocks claw back once again.
Okay, fair enough. That's the view coming in on the entire Adani Group of stocks. In fact, let's also hear it out then from market veteran Madhu Kela, his outlook on the Adani Group stocks. And earlier this morning, we were talking with Sandeep Tandon. Here are what he had to say regarding the outlook of events that have played out.
This is a great question. I think people's opinion have no value. Only facts have value. So let's look at the facts. So as per my understanding, Adani Group has spent 1.55 lakh crores in acquisitions in the last 3 to 4 years, including the Ambuja Cement acquisition which they have done. Their total debt reported today by their own sources is roughly 1.85 lakh crores. In another way, you can say that all the debt, majority of the debt which has come for acquisitions, right? And now, again, it is not my opinion. It is a fact that these acquisitions were not very expensive, as there were many bidders in all cases for these assets, including the Ambuja Cement acquisition which happened. The second fact is, so I do not think that an infrastructure company, if it takes debt for acquiring assets, which are long term in nature, it can be called that it is over leveraged.
Could be a combination. If you really look at the last 1 month or so now, India has been underperforming. Okay, so whenever you see underperforming happening related to China or related to US also this time, so it's obviously hot money, the ETF money or passive fund money moves out. So that pressure we have seen in nearly last 1 month. Okay, and with that background, this event also got triggered. So we added to the fuel. So that's the way I look at. I think it was more of a event which unfolding and the background was weak. The conviction is people are generally closer to budgets. Also, people are slightly nervous. So I think it's a combination which played out rather than saying just one specific thing which played out. Obviously, that got triggered. That's the way we look at these markets.
Okay, so that was the 360-degree roundup of what the take is regarding the Adani Group of companies. But not just that, there are earnings which we have to deal with as well. So today we got the numbers from Laurus Labs, which looked all right. So that stock reacted positively. Also at Bajaj Finserv, which reported numbers, and we just talked about that. Of course, after the beat coming in from Bajaj Finance, it was expected Bajaj Finserv will come out with its good numbers, and Laurus Labs is now seeing some profit booking. Weak earnings coming in from GAIL, exceptionally weak, wherein the profit has been wiped out to the tune of 80 to 90%, so a deep cut of almost 5 to 6% there. And similarly for Exide, the numbers are subpar, below the street expectation, and that's why it's getting a bit of a dropping down about 5%. Vinay, if I wanted your take regarding a couple of these names, the Bajaj Twins, GAIL and Exide, what would the call be in terms of what is the best buy? Vinay, I think you've put your...
In fact, it has breached the previous bottom on the daily chart and weekly chart, so it looks weak. How we have to see, because it is a reaction of the result, so we have to see where it is closing. But the current structure is not that much convincing. But yes, if we go by the Bajaj Finance, the setup looks a bit convincing, because let me look at the chart. Yeah. So the setup is quite convincing because there is a positive divergence on the oscillators I can see, and some short-term moving average resistance has been taken out. So I would rather prefer going long in Bajaj Finance as compared to the other stocks which we have discussed, because Laurus Lab, Exide Industry looks weak on the chart, while Bajaj Finance is looking stronger and good potential to extend the pullback, whatever is going on right now.
All right, let's slip into a very quick break. Stay on with us, gentlemen. And as we do that, hear it out from Punita Kumar Sinha, Managing Partner at Pacific Paradigm Advisors. She doesn't see any particular need for a change in the tax regime and believes that the markets will be impacted negatively if there are tax hikes in the budget.
Well, I don't see particular need for any change in the tax regime, other than the fact that globally, as I mentioned, US and some of the other markets, the rates are a lot higher than what they are in India. So if the government has some plans to invest somewhere else and they need to garner more resources, then this is a place where they could easily think of, given that, we are below a lot of global markets in terms of our capital gains rates. So that's the only reason I would see them wanting to do that, is to use the money for some other, projects or other allocations in the budget.
Back to closing trades. A listless market at hand, but perhaps that's better than what we started off the day with. So currently quoting around the 17,580 mark, quiet when it comes to the broader markets as well. But let's find out some closing strategies from both of our chartists. And Naresh, what makes it to your list?
So that is HDFC Bank, which looks interesting. The stock has seen a correction and it is back to that 1580 to 1600 support levels, the lows made recently. And this is a stock which does not have as much correlation with the Adani Group. So expecting this to go back to 1650 in the short term. So looking at HDFC Bank for a big bounce.
HDFC Bank, a thumbs up coming in. What about you, Vinay?
Yeah, so first I would like to recommend Bank Nifty because I feel that Bank Nifty is headed for the pullback, and whatever correction we have seen in the last 4 sessions, it has come to an end, and we are about to see a sharp pullback. So considering that evidences, I would recommend going long in Bank Nifty February future around 40,400, and I will suggest a stop loss at 40,000 for the traders, and upside target could be 41,100. So I'm expecting Bank Nifty to recover from this current level, keeping a stop loss at 40,000 in February future. The another stock which is looking good to me is the HCL Tech. So as we discussed that IT sector is outperforming, so definitely this HCL Tech is one of the outperformer in the IT space. So HCL Tech February future can be we can go long with stop loss of 1115, and target can be kept at 1180. So these are the two stocks which I would one index and one stock I would like to recommend for the trading.
Those are the top recommendations coming in, but let's take a look at the intraday chart of PNB as well. The bank just reported its numbers and they were subpar below the street expectations. The net profit is down 44% on a year-on-year basis, and even if you look at NII, the growth is 18%, a tad bit lower than what other peers have been reporting, and that's why the disappointment on the stock price. However, having said that, the asset quality has improved. Both the GNP and NNP ratio has come off. The provisioning continues to be higher, so 370 crore provisioning is what we saw in the quarter gone by. So that's the reaction coming in on PNB. But a reaction coming in on Aegis Logistics as well. In fact, the stock is moving on heavy volumes today. It's broken out of from a horizontal resistance zone. It's hit a fresh 52-week high on an intraday basis, and this is the highest and the biggest single day gain that we have seen in 6 months as far as Aegis Logistics is concerned with respect to the price volume buzzers, because remember, the company comes out with its earnings in a couple of days, and ahead of that, that stock is in focus. IndusInd Bank, that's seen quite a bit of breakdown today from a double top chart pattern. It's declined for third consecutive week, and the volume is almost 2x the 20-day average. So IndusInd Bank is the stock that I'm talking about. That's taken it on the chin today, down about 4%. L&T is the last one on our radar with respect to the price volume action buzzers. It's declined for 6th consecutive session now. Lower highs and lower low is the kind of pattern it has been forming for the last 5 sessions as well. So inherent weakness on L&T's chart, and very interesting just because of the fact that there are earnings today and Street was banking a lot on it given the fact Q3 is seasonally a stronger quarter, plus we have seen quite a bit of run up there as well. In fact, let's go across to my colleague Lisa, who's standing by to tell us what exactly is the Street expecting from Larsen & Toubro this time around.
Well, Larsen & Toubro is expected to post a good set of numbers. Revenue growth is expected at around 15 to 16% on year-on-year basis, and that is on the back of a strong pickup on the execution front. Well, the pre-election finalization of multiple large order, that is also expected to aid the already strong order backlog. Talking about the core EPC segment, the revenue is expected to grow around 9 to 10% on year-on-year basis, and that is baking in the improved construction activity. On the margin front, improvement in margin is likely to be seen both on the year-on-year as well as on a sequential basis, and that is on the back of the cost rationalization measures undertaken by the company and also the moderation seen in the key commodity prices. Well, on the order inflow, that has been strong in quarter 3. They won order inflows of around 35,000 crore, and it was mainly significant large order deals concentrated in the high rail segment and also in the mining and metal segment. Well, the key factors to watch out for would be the outlook on capex, the traction in execution of orders, the risk on the export orders considering the rising issues on the global front, and also traction in new areas such as the green energy, the battery storage and other new age areas.
All right, thanks very much, Lisa, for walking us through those details. Vineet, let's get in your take then as to what the street will be closely... Vinay, rather, sorry. Let's get in a take as to what exactly you think would be the outlook on the charts for an L&T.
Yeah. So L&T has been an outperformer recently. Stock registered a new all-time high at 2297. From that high, it has come down a bit, around 7 to 8% correction, and consecutive for last 7 days, it has been falling. It could be a short-term correction in the overall bull trend. So support is there around 2050, 2060, where the previous bottom is placed on the short-term charts. So I would say that one should wait for the confirmation of the trend reversal on the upside. But however, if somebody is holding the long position, I think 2050 is a proper level to keep as a stop loss in the long position. So if market gives support and LNT holds around 2050, then we can expect a recovery. But as such, there is no recovery sign as of now. So we just need to track this level 2050 as a stop loss in long positions.
That's the take coming in as far as L&T is concerned as well. But about the entire IT sector, I know we have put this question to Vinay, but Nuresh wanted your take as well regarding IT as a basket. It's definitely showing signs of making a bottom. Which are the top stocks that you would recommend?
So in the large caps, clear strength is in HCL Tech, which is trying to come back and cross the November-December highs. Also, one of the strongest bounce from 900 all the way to 1130 levels. So that is one in HCL Tech in the large cap space. TCS on dips could be interesting, but it's already bounced back quite a bit. In the small cap space, it is Birlasoft, which has been trying to make a very strong base around that 280 to 90 mark. It has corrected all 50% from the top. So that is one stock which has a potential to go back to 330 to 360 levels in the short term. So I would go with HCL Tech and Birlasoft.
Talking about tech, Mahindra, so the company comes out with its earnings later today, and the reason is that the company has managed to disappoint with respect to its earnings so far. And today as well, we're expecting a bit of a muted set because the top line is expected to remain flat sequentially. There might be a growth of 2.7% when it comes to rupee revenue, but that will be largely on account of the rupee depreciation. The reason is that A, there have been higher furloughs. Secondly, the segments of high-tech and telecom have been impacted. And thirdly, the company had pointed out that when it comes to the enterprise vertical, they are ramping down some of the legacy orders, and that will start showing into the numbers. And that's the reason, consequently, your margin profile will also be just stable with an improvement of maybe 20 basis points, because there was a one-time cost last quarter which won't be there. So we're expecting an improvement of 20 basis points. Profit, however, might decline a tad bit because taxation is expected to increase this time around, and that will impact the numbers as well. With respect to other internals, the deal bookings are expected to remain soft, just around that $700 to $800 million mark, below the average that we have seen in the last many quarters. Plus, the management commentary will be important with respect to the outlook, furloughs, demand, attrition, headcount trends, as well as the margin performance, because in Q1 they had said that they will stick their neck out saying that 14% margin would be manageable by end of the year. In Q2, they were a bit iffy about it. Let's see what the reply is when it comes to Q3, whether they'll be able to come back to that 14% mark or not as far as the IT sector goes. But apart from IT, Vinay, the other space which is seeing a bit of an upside or a bit of a move is the cement pack, right? So you have Shree Cement trying to make a bit of a move. JK Cement is up 4%. And of course, keeping aside the entire, Adani factor, you have ACC and Ambuja, which are also showing quite a bit of, now at least, an upside from the lowest point, and Ultratech Cement too is up around 3%. Chart-wise speaking, which is the strongest chart when it comes to cement sector?
Yeah, so from cement sector, Ultratech Cement is the strongest chart because it has not breached its 200 days moving average. In fact, in previous session, we saw that it took support at its 200 days average, and today we have seen a follow-up buying. Today's stock is up by 2.5%. So this is one of the few stocks which have not breached their long-term moving average, like 200 days moving average. And this is a large cap stock, so safety is obviously there. So as compared to the other stocks, I would say Ultratech Cement is the strongest stock on the chart as of now.
All right, stay on with us, gentlemen. Lots more to talk about. We'll take a very short break. Be right back as we're mapping out the recovery in the markets. Status quo on the index, though, around the 17,567 mark. Let's hear it out then from Daljit Singh Kohli. He's bullish on Sri Renuka Sugars.
Wilmar is owning 62.5% of the company. Wilmar, as we know, is the world's largest food processing company. It has presence in 50 countries, and it is well known for the food agri-businesses all over the world. So now, first thing is the change in the promoter. Second thing is for the sugar cyclicality, the biggest change which the government of India has done is on ethanol part. And if we know the capacity of Sri Renuka Sugar in distillery, from 770 kiloliters per day, they are going to 1400 kiloliters per day, which will make them the biggest capacity in India of ethanol availability. That will come, full benefit will come from FY24. So these are the two major changes which has happened in the company, and this has happened from 2020 to 2022. In this period, the stock has also moved from penny swap from 10 rupees, 15 rupees to 55 rupees. Now, the good part is that company is right on the trajectory, and from almost 2,000 crore rupees losses in FY19, today FY22 they had a loss of 136 crore. TTM basis they had a loss of only 60 crores, which means from very soon they will become profitable company. So we are there is a transition happening, and we are going to preempt that, and we are going to take the advantage of that. That's why we are saying that from 55 rupees also, probably the stock can go back to 80, 90 rupees as the numbers start coming in. And because the sugar cyclicality is coming down due to distillery business, that will also take care of the climatic the climatic conditions on agriculture, etc.
Well, a very sharp recovery. That's what we are witnessing at the moment. A 100-point recovery in the last 2 to 3 minutes itself. And that's the volatility we have been talking about. 17,630 at the moment for the Nifty. And the Sensex is almost 130 point in the green now. Just when we started off the show, there was a cut of over 200 points when it comes to the Sensex. And suddenly it's just moved into the green as we speak. It's Bank Nifty which has shown the maximum amount of recovery, it seems, because the entire Bank Nifty is also now just around that flat line. Yes, still 60 points down, but quite close to the flat line now. In terms of the key movers, well, in the last few minutes, it's again Bajaj Finance, which is 5%. Adani Enterprises is continuing its recovery as well, so 5% gain there. Ultratech Cement, Bajaj Finance, Finserv rather, which reported numbers today is up 2%, and NTPC also came out with a strong set of numbers over the weekend, so an uptick of around 2% there. On the losing side, the cuts have been reduced. So IndusInd Bank, which was earlier seeing a cut of around 4.5%, now the cut is reduced to just 2.5%. And similarly, the other banking names and financials like HDFC Bank, Axis Bank, ICICI Bank, you're seeing that all of these counters have either cut down their losses or moved into the green. In fact, Kotak Mahindra Bank and ICICI Bank are now sitting with a gain of 1%. So quite a bit of recovery is what we are witnessing at this point of time. Before I welcome Avik Mitra, let me go across to Nuresh and understand. Nuresh, what should we make of this move that we are seeing in the last 2-3 minutes itself?
So classically, this is what generally happens. We see a lot of last half an hour buying in markets when we are trying to make a bottom. We saw this day before also when we tried to recover from 17,500 to 600. So we've seen a good recovery. More importantly, it is across the board. It is not just Nifty, it is Bank Nifty as well. The small cap index in the morning did not break a new low, which was of yesterday. So overall, we are still in a very strong indication that a bottom is in place. The doji candle which we are making right now is generally the first indication of a short-term bottom, as well as at times a major bottom. The confirmation needed is a close above today's high over the next 2-3 sessions.
Avik Mitra, founder and CEO as well of Aviksat Financial Advisory, joins in on the show. Avik, hi there. Good to have you. Do you believe that we will likely see consolidation in the markets, even in the run-up a day prior to the budget? And what's your outlook as to whether or not we're likely to see some sort of tinkering on the tax front? Do you think it's just budget banter, that nothing is really going to emerge on that front? And if we were to see some sort of changes, do you believe there will be a major negative reaction in the markets?
Yeah, good afternoon. I think budget will be okay. I prefer that there is no tinkering with the capital gain tax or things like that. And I think that the total budget balance may not be very difficult for the government to do because the tax collections were very, very robust. One due to inflation and one due to reopening of the economy. The tax collections were good. Formalization has helped. GST collection is also going at a record level almost regularly. So I expect that Madam Finance Minister don't tinker with the budget or don't tinker with the tax at all. And uncertainty will remain and market will obviously react negatively if there is a tinkering on a negative side on the capital gain tax.
The other space which is doing a bit of a movement at the moment is the entire platform company. So Nykaa suddenly spiked 7%. Easy Trip Planners was already excited since the start of the trading session. Has piled on some gains, 6% higher there as well. Abhi, what's your take regarding some of these new age tech platforms, etc.? Is there any preference amongst these names?
We track all these stocks, but we don't have much investment apart from one. And that is basically in the space of insurance. It's a disclosure. We own it, and it is not an advice, and we can sell it if at any point of time if we find that the results are not good. So this is the only stock for a discussion purpose. I can say that we have made an investment. Apart from that, there are many stocks which are on our tracking list. We have nothing against those. The valuations are high. The prices remain volatile for all these stocks. We need to see that for a few quarters, the results are coming good. And we don't mind buying those stocks at a little higher valuation than what is present today. But at the same time, we want to see that first the overall market gets settled, overall market volatility, which has gone up. And you have seen that. I think we have seen today one of the record volatilities. And we just prefer to wait and watch for the time being and just see that the storm settles about this FPO. Let us see how the FPO works for Adani tomorrow. This is a very, very short term. There is an issue that is as soon as it's going to happen tomorrow. So after that, I think people can take positions on different stocks. And about the newest stocks, we have invested in one. We're tracking all. We like their business models, but does not mean that the valuation is on the right side.
As per the kind of numbers that are trickling in with respect to that FPO subscription, the participation is looking rather negligible as of now. For the retail, it's at about 0.03 times. This was as of about 1 p.m. We continue to get more updates. But yes, of course, waiting and watching when it comes to that. But it's the cement stocks actually from the get-go that have had quite a decent run despite what the rest of the market is up to. So JK Cement, for instance, is up 3.5%. Shree Cement, Ultratech, Ambuja, as we've been flagging off from the get-go. Something like a Heidelberg or even a Mangalam Cement, the smaller counters, they've all been in the spotlight today. Let's get in a view then, Vinay, as to how you're looking at the charts of some of these candidates.
Can you please repeat the question? Which are the stocks we are talking about?
I'm talking about the cement stocks in trade today. Yeah. Ultratech, JK Cement, Shree Cement, etc.
Yeah. Okay, so as I mentioned earlier, also the Ultratech Cement is one of the strongest stock in the cement sector because it took support at its long-term average, which is 200 days moving average and closing on a strong wicket. So priority should be given to the Ultratech Cement. But if you were to go by the second stock, then I think JK Cement, which is forming a bullish engulfing candlestick pattern on the daily chart, that should be the another stock which can be looked at because overall today's close is looking convincing. But first priority should be given to large cap stocks like Ultratech, followed by the stock like JK Cement from the cement space.
Intraday chart of SRF as well, the numbers are just trickling in and it doesn't look a very enthusing set. I mean, on the top line, it's pretty much flat. 3470 crores versus 3345 that it reported last year. And the profit also is at 510 crore versus 505 crore last year. Margins are down 255 basis points. The margin has come in at 24% versus 24.6%, but maybe the market was expecting an even weaker number because the stock is spiking after reporting a bit of a muted set. So maybe the expectations were a lot more tempered when it comes to the stock of SRF as well. But Avik, just coming back to the point regarding the budget, you said that you're hopeful that there won't be too much tinkering. But on the positive side, if you were to take a bet with respect to which sectors would most likely benefit, which would those be? Would it be defense, industrials, power, capex, infra? Which is the theme that you like?
The defense part you said, that is a structural story. So it is, I don't think that anything special is going to happen in the budget. But structurally, the defense sector will have a long time of positive run going ahead. It is our feeling. And second, as per the budget is concerned, I would like to see that this infrastructure spending which government has done and which actually has kept the GDP growth rate at a level where we are in. So that is continued for the next year too. And also, I would like to see that there a little bit more development to the states, so that the states can spend in a way where the lower section of the people who are actually suffering due to inflation or due to the low kind of job openings or low hike in salaries or their incomes. So those kind of people get supported, and that will in turn will be good for the market, because that will actually help the FMCG sector and the consumer goods sector to perform better, because which was actually lacking on the volume level for last quite a few quarters. So I think that since this is the last final budget before the election, I think government will look into these areas, and I hope in these two areas. One is the devolvement to the states, and other the infrastructure spending. So those two areas I would like government to spend, and the quality of spending, if more goes to the capital rather than the revenue, and how the revenue expenditure versus capital expenditure ratios are moving, those will actually we will look closely.
All right. Where does your preference lie within the entire auto space?
Yeah, auto space, specifically the auto ancillary space, looks quite interesting for us. And we feel that on a China Plus or whatever additional this Atmanirbhar story, the sectors where already we are having a kind of good backbone created in country, where the logistics, back-end, supply chain, these are created. Those are the sectors which will benefit first. So that way we feel that there is a long-term story on auto ancillary space going ahead for a few years. I don't specifically expect anything particular, because PLI scheme is already there. There is no point in having too many schemes running simultaneously, rather than if the policy level things remain same, not specifically to the budget, and there is no tinkering of budgets or GST or anything like that on a very regular basis, and ease of doing business, moving the files in a smoother manner keeps happening, then I think this has a long-term runway to go.
Okay, but apart from the budget, which is of course the big thing to watch out for day after, there are other events that we need to watch out for as well. For instance, tomorrow we'll get the fiscal deficit data. So just ahead of the budget, that will be important to track. Globally speaking, we'll get the China manufacturing PMI as well as the non-manufacturing PMI data. So that will also be interesting to track, given that Chinese market are just coming out of that lunar holiday as well, 10-day holiday. So the market move there will be a tad bit exaggerated. In terms of earnings, Sun Pharma is one stock which has been in focus today. It will come out with its earnings tomorrow. Coal India is the other candidate, plus UPL, Power Grid are the other names. And remember, Power Grid is a bit subdued today, down 3-4%, maybe ahead of numbers. It's a tad bit nervous around that. In other names, we have Blue Star, TTK Prestige, Star Health, IOC, GCPL, Westlife Development, just to name a few other counters. Corporate action, Adani Enterprises FPO rally continues, and that's the biggest talking point as far as market is concerned. But separately, there is a board meeting there tomorrow at Shriram Finance as well for some resource mobilization plan. For Vodafone Idea, there's a board meeting to seek approval of shareholders as well and convene an EGM. This is regarding the preferential issue of the debentures that they had done to ATC. And another events to watch out for, Parliament's budget session will officially begin tomorrow, just a day ahead of the union budget. So that will be interesting, because we'll get the bias from the finance minister as well as prime minister just ahead of that. So that too will be an important event to really watch out for. But in terms of the market, well, 17,660. So it looks like we are going to end towards the highest point of the trading session, because it was just around 17,700 mark, and the sector churn continues to be largely same. Before I take the BTST ideas, Avik, just wanted your take regarding financials. Has the texture changed in the last 1 month? Because now PSU banking names are seeing a bit of a profit booking. We saw the numbers from PNB also come by. What's your take? Is the tilt now more towards private lenders when it comes to risk reward?
We generally are not invested into the PSU banks. PSU banks rally. Actually, when we came last time to a channel, I think I talked about that take profit on these PSU banks, because on PSU banks, we never have felt confident about holding it for quite some long time, because one credit cycle, I think we have done very well in cleaning up. Almost it took 10 years to clean up this balance sheet. But the point is that again, it may go up in the coming 10 years. We have no idea. So it is better, and also PSU banks have their own responsibilities towards funding projects, which sometimes may not look economically 100% viable or may not be touched by the private sector. So, but as an investor, we need to see that our investors are protected. So if at all we have to invest, I will invest into some private banks, basically into the smaller banks, which are showing a quarter-on-quarter good performance, good improvement in their books, good building up of the franchisee. But generally, as a policy, Avixat equity are always lower in their weightage on the financial sector compared to the market.
Okay, now let's get those BTST calls going then. And Vinay, what's your BTST recommendation?
Yeah, so I've already discussed the HCL technology, so which is looking the strongest in the IT space. So HCL technology February future can be bought for the BTST around 1138 and stop loss can be kept at 1115. Upside target could be 1180. The second stock I would like to go STBT, which is JSW Steel. So metal sector has been underperforming today, and many large cap stocks have broken down below their crucial supports on the short term charts. So I believe that JSW, which is performing underperforming, can be shorted. The February future is trading at 705, 706 odd levels. So at this level, you can go short and stop loss can be kept at 720. And on the downside, we can expect a target of 680. So these are the two stocks I'm recommending for BTST and STBT. And as well as I recommended previously that 15-20 minutes back, I recommended going long in Bank Nifty around 40,400. Currently, it is above 40,700. Still, I believe that there is some space on the upside and Bank Nifty can be bought for the BT as well.
Okay, let's find out what Naresh is picking out for the day. Naresh?
So first is a buy on HDFC Bank, which has seen a recovery from 1580, expecting a bounce to 1640 levels. A stop loss now would be at 1600. Second is a buy on HCL Tech, which continues to be the best in IT. Stop loss at 1120 and a target price of 1165.
Okay, so HCL Tech seems to be the consensus buy coming in from our technical experts. In the meantime, let's pull up the intraday chart of Mazgaon Dock because the numbers are just out and it looks like on the top line there is a growth of almost 17 to 18%. Margins have too improved. We're seeing a number of around 16% and I bet that will be an improvement of around 200-300 basis point on a year-on-year basis, and that's the reason that stock is flying away now 7% higher. And even if you look at the profitability, 354 crore worth of profits this year, and that compares to 215 crore that they did this time around this quarter last year as well. So a big improvement coming in as far as profitability is concerned as well, and no wonder that stock is flying away in trade. And just a few moments ago we were talking about SRF, so let's see how that stock is doing as well, because optically the numbers didn't look very impressive, but it looks like the stock is excited. So there's a 2% uptick as far as SRF is concerned. Result reactions coming in, and it seems that the market mood has changed a tad bit, so we are seeing that positive reaction come in as well. Because globally speaking, the mood is actually a tad bit somber. You have the European markets which are down anywhere between 0.5 to 1%. The French CAC is down 0.8%. German DAX is down 0.8%. And even the rates from US are a tad bit weak. So Dow futures are suggesting a cut of 200 points and NASDAQ is down 1.25%. So I'm not sure if we already preempted that at the start of the trading session, or would this open further downside when we start the trading session tomorrow itself. Naresh, just your sense, is there a case to be made to carry forward any kind of positioning at the index level?
So I think what we've done today is a classical bottoming out candle, so one can carry. The only problem is the stop losses would be deep. So say one would have a 2% stop loss on the Nifty and the Bank Nifty. So if one can manage with that, it is a clear buy.
Okay, a clear buy coming in there, but just last 5 minutes of the trading session and it's been a rather volatile one. Just wanted your take as well. A week when it comes to the entire IT sector, HCL Tech is the consensus buy from our technical experts. What about you? Do you like it as well?
We like that performance of the company, and we are invested in some portfolios into this particular stock. So this is a disclosure, but we can sell it anytime. So don't take it as an advice. We think that the IT sector on the whole has to be looked at, specifically the front end has to be looked very carefully. And there are opportunities which are emerging. If you want to have a safe environment to put your money in the situation of uncertainty. And we are invested in a few.
Vinay, top capital goods or capex related themes based stock that you would like?
Invested in quite a few of the capex related stories,
right?
And those are basically on the domestic focused capex basically, and we are invested there for with the 2-3 years views.
Vinay, his view on that, on the charts, Vinay.
Pardon me, I didn't get the question.
Vinay, asking you about your capex related bet, a stop stock on the charts.
I didn't get the idea. You're talking about capital goods?
Yeah, so within infrastructure, capital goods sector, defense, railway, any of those capex related stocks?
Yeah, so one should give priority to L&T. As I said that it has reached the near support. So L&T is relatively better in terms of large cap stocks, but in infrastructure stocks, purely mid cap segment, I like PNC Infra bit as compared to the other stocks. So these two stocks I am looking at for the capex related and capital goods and infrastructure sector.
All right, thanks for that. Let's wrap up the markets then. And second day of what started off as a pretty abysmal series, and we did see the Adani Groups continuing to dominate headlines, although do remember it's a busy week on the earnings front, the FOMC meet, of course the union budget, and we'll be seeing a lot of other big headlines take place this entire week. But we started off on an absolutely tempered note, perhaps taking heart in the fact that recovery has been evident. So yes, we wrap up the day 66 points higher at 17,670 for the Sensex, up 270 points. The broader markets, though quiet. IT has taken leadership, PSU banks to a certain extent, and the Nifty bank as well has come back from the low point of the trading day around the 40,400 mark. But energy languishes, commodity, high beta metals or consumption, that remains in the red, and pharmaceuticals as well giving it company. So let's take you through then some of the winners on the frontline index. Bajaj Finance stands tall. Bajaj Finserv gains, Adani Enterprises. Yes, there has been a recovery, but the numbers as of 3:20 when it comes to the FPO subscription numbers, nothing to really shout home about. Ultratech Cement, HCL Technologies, Reliance Industries up about 1%, M&M, Wipro and Eicher, those are some of the other gainers. Power Grid loses, Bajaj Auto, Indocin, heavyweights like L&T that we're awaiting numbers from, as well as Tata Steel and ITC are in the red. Let's take you through then some of the mid-cap movers, and it is Adani stocks all the way. Adani Green Energy, it slumps another 20%. Continue to see a market cap erosion in a lot of these names for the second straight day on the chart. Adani Total Gas, another 20%. Adani Transmission as well ends up in the red, and pull up Adani Ports for you. Adani Green, Adani Wilmar, just to give you an overall picture as to how that entire cluster of stocks has shaped up today. BEL reacts negatively to its numbers. Sequent Scientific, Varun Beverages, Dhani Services, Exide, they're all in the red. While on the flip side, Aegis Logistics gains, Mahindra CIE, Intellect Design, Jindal SAW, Indian Bank, Bank of Maharashtra, Voltas, those are some of the gainers. A quick run through for the newsmakers. Kajaria Ceramics, weak Q3 with flat volume growth. Laurus Labs, 50% growth in their revenues, profits as well gain. You have Vedanta, JP Morgan has an overweight rating with a 350 rupee target price on that. Bajaj Finance, as we highlighted, the NII growth has been up by 24%. DCB Bank, Aarti Drugs reacting to its numbers. Tech Mahindra, L&T yet are awaited. That pretty much wraps it up then on this edition of Closing Trades from the entire team that put the show together. Thanks so much for watching.